Good afternoon, folks. Andrew Schartenberg here, your mortgage engineer. Today is Monday, January 10th, and I'm here with your daily rate report and homebuyer tip of the day. Getting right into it, we have conventional 30-year fixed mortgage rates at 0 points today. You should be averaging, for the perfect scenario, somewhere around 4.75%. And on the government side of things, for FHA and VA loans, we're looking at about 4.5%, again on a perfect scenario, with 0 points for the 30-year fixed loan. So those are the rates that are pretty much available widespread today. Why are rates where they are today? Well, look for Monday and Tuesday to be very much affected by the stock market and the relationship that has with the bond market. Currently it's down a little bit today, and there's really no relevant economic news until later in the week. So I expect that will be pretty steady through Monday and Tuesday. Wednesday, we're going to see the 10-year Treasury note auction, which if the demand in that auction is weak, we could see some higher mortgage pricing. That is the auction that is most closely tied to mortgage rates. We're also going to see the Federal Reserve beige book of economic data come out on Wednesday, and if it's greatly different than expected, we could see some higher mortgage rates or lower, depending on which way it goes. Thursday, we've got the Producer Price Index, which measures inflationary tendencies or inflationary pressures at the producer level of the economy. Relatively important piece of economic data which can affect rates. Then we've got jobless claims and the 30-year note auction, which are both kind of minor. Friday, very important, the most important data of the week. We've got the Consumer Price Index, which is going to measure inflationary pressures at the consumer level of the economy. So if that's greatly different than expected, we could seriously see some volatility in rates. And we also have consumer sentiment coming out on Friday. So the latter part of this week is going to be pretty heavy in data, and it could cause some volatility. Rates are very good today, so my recommendation for a lot of you folks, you might want to consider locking your rates today if you're out there shopping for a mortgage and are in contract to purchase a home. Again, that's not going to be right for everybody, but with a lot of volatility late in the week, that's a smart thing to do. Okay, for the home buyer tip of the day, guys, I want to let everybody remember, do not forget to account for your closing costs. So when you're out there and you found the home that you really like, you're going to want to remember that you have closing costs in addition to your down payment. Now, we know that there's a lot of different loan programs out there, and your down payment can range anywhere from 3.5% all the way up to 20% or more. What you want to remember is that closing costs are a hefty chunk. Here in Rhode Island, you're going to be facing your lender and broker fees and your legal fees, and those are the actual closing costs themselves. But what many people do is they lump everything together. So your closing costs that you might have heard of if you're talking to other people could also include your escrows, your prepays, and any insurance that you may have to purchase. So probably a good ballpark number for those of you folks that are out there looking and you don't want to get real deep right now is going to be, if you're looking at a purchase price of up to $150,000, between everything that you're going to have to account for aside from your down payment, it's going to be somewhere in the ballpark a lot of the time between $4,000 and $5,000. If you go over $150,000, it can certainly run up quite a bit higher, but for a safe bet, you can be somewhere between $4,000 and $6,000. Now that's going to account again for the closing costs, which are your legal fees, including title insurance, your lender fees, any broker fees, processing, underwriting fees. And then on the escrows, you're talking about a quarter's worth of property taxes. You're talking the first year of homeowners insurance, another 2 to 3 months of homeowners insurance on top of that, and then your prepaid interest, which is going to be based on the day that you close the loan, folks. So don't forget when you're talking with your real estate agents to account for that chunk of money, and remember that you can always try and negotiate for it in a seller concession. It is very important that you talk to your mortgage professional before putting your offers in. Most of us do this on a daily basis. It takes us about 5 minutes to put together an estimate for you so that you are well educated when making an offer and you don't get caught with your pants down. If you ever need to reach me, you can get me at andrew@otfunding.com. Again, andrew@otfunding.com. Look forward to a great week of interest rates, hopefully, folks, and good luck out there.